Good afternoon. This is Tom Alexander. It is Sunday, February 13th. Happy Valentine's Day tomorrow, by the way. A lot to talk about this afternoon. This is the addendum. This is the video addendum to the report that you've received. And if you would do me a favor, subscribe to the channel if you have not, and hit the alert bell. If you do that, if you hit the alert bell, what will happen is when I post a new video, you will be alerted to it. And if you find the material valuable, like it. Okay, let's look at some stuff besides my face. Okay, here are the four primary US trading indices, the cash sessions. And I'm going to do a deep dive into, in particular, the S&P in just a minute. But the bottom line here is that the last 2 days, there's a lot of downside conviction. We're also below high volume nodes in all the indices. Now, the Russell is the exception. It just sort of was up, down, up, and now it's down again. But the NDX, NASDAQ, the S&P, and the Dow have all taken out high volume nodes of minor balance areas following this late January volatility and decline. And you know, I've discussed how compressed the market was from several technical measures in here, and how that has almost always led to very strong rallies. Well, we got the very strong rally, but it stopped on a dime. So that's a little bit of a heads up. Once again, something is different this time. Something is different than anything that we've seen since the March 2020 low. Now, I don't know if it means we're now in a bear market, or if it means simply that we're finally having something that is normal in terms of a bull market correction, which is a protracted period of volatility that includes retracement of the primary trend. And this bull leg, the bull, and I consider the bull market to have begun in March of 2009, and the last bull leg to have begun of March 2020. So if we're going to retrace a substantial part of that March bull leg from 2020 or some portion of it, we don't know. But what you can follow this auction process and see how structure is forming. You can see where the development is. You can see where the migration of value is. And quite frankly, right now, a lot of that is up in the air. This is a volume node. There's a volume node in here. There's a volume node here. So we broke very sharply out of this, and we broke very sharply out of this, except we retraced it very sharply. Now what we're in is we're in an elevator shaft, and forget the fact that there is a high volume node here. Let me go to a profile chart. I'll go down in time frame. And this is a lesson. This is an auction market lesson / market profile. And as I've said a skillion times, you don't want to be a market profile trader. You want to be an auction market trader. And the distinction is you don't be a slave to a charting format. This is simply a way of displaying data. Now there's this high volume node, this magic high volume node right in here. Well, that's not the one I wanted. Magic high volume node right in here, the midpoint of all this stuff in here. And you know, a lot of the market profile people say, well, there's high volume, it's going to stop in here. And what's more important than that is really what happened here is you have conviction to the upside, then you had balance form, a break to the upside, and now it's failed. Now you're back into this conviction. So this opens up this entire range immediately. Now, we'll probably get a verdict on this in Globex. And to cut to the chase, to give you something practical, if this is going lower immediately, we probably should not retrace more than half into Friday's range. Now you can go to your futures charts and you can look at the future sessions, but when the cash market opens, if it opens above or if it's or closes above the midpoint of Friday's range, is probably bullish. Otherwise, this entire structure is in play and lower lows could be seen. And if lower lows are seen, then let's go back to, let's see, where was that chart? Here we go. If lower lows are seen, it looks like it might be in the NDX first because it's deeper into this previous range of conviction, the elevator shaft, and any of the others. And if the NASDAQ does trade to a new low, then you immediately start looking for signs of either continuation or stopping in all of the indices. Now, I know this is a little bit more if and or butish than usual, but right now that's just the way it is. And of course, those of you that subscribe to the daily report, you know, we cover this in real time and keep it updated. So, but that's the situation as we head into Globex tonight. And as far as the technical situation is concerned, that's going to be reflected in price, and I will keep that updated also in real time in the live room, all the breadth stuff that we typically follow. All right, let's take a look at some of these other markets that are also moving quite sharply to and fro, not the least of which would be notes and bonds. And the trend is definitively down. You know, I'd be selling rallies. Maybe notes and bonds are due for more retracement than we've seen in a while. There's no good reward to risk here. Gold seems to maybe be trying to break out to the upside. This is potentially, if we take out Friday's session low, it's a very nasty selling tail. And you're back into the twilight zone with gold of this choppy range. It certainly would not want to be short above Friday's session high. Crude just continues to trade higher and higher and higher. Just, you know, follow it higher. Right now, the path of least resistance is up. The very, very early initial signal something could be developing to the downside would be a break of the low of February 9th. And the dollar is undecided as well. It's probably a short below the low of the 4th. Otherwise, I would just leave it alone and see what happens. Guys, have a wonderful rest of your weekend. Enjoy the Super Bowl. And I'll talk to you, some of you tomorrow and some of you next week.